Hi everyone, Pat here, and welcome to an educational video today. Something different on my channel and something I'm going to be doing a little bit more, a bit of an insight into the classes, the courses, and the information that I put out within the Wealth Group Discord. But I'm going to be trying to do these weekly, maybe once every 2 weeks, some sort of short educational video, something that I think not many people use, or just basically anything I think you could be using in your system already, right? So something that can be of assistance to you in that system that you already use. So today we're going to be talking about high volume node POC trading. So not talking about the high volume nodes so much, but more so the point of controls within the high volume nodes. So onto the introduction, and this is what we're going to be talking about today. So we're going to be going over briefly what volume nodes are, what point of controls are, then taking a look at the high volume node POCs, and then some examples of trading these high volume node POCs within an order block. So this is mostly down to higher time frame trading. You can use point of controls obviously on all time frames and any time frames. I know a lot of people that use point of controls for multiple different ways of trading, but these specific point of controls are mostly used for the higher time frame outlook. So identifying higher time frame reversals, the daily, the 3-day, the weekly, the monthly, using these high volume node POCs within these higher time frame volume profiles is going to be very beneficial to you for getting that overall market bias, right? So that sort of macro bias on the market. So today's presentation will be discussing high volume node areas and the point of control within these areas. Once locating them, we can use these point of controls and these point of interest in confluence with our supplier demand order box for trade entries. So it's pretty important that you understand how to locate order blocks and understand what a point of control is. We'll briefly touch on a point of control today, but I won't be directly talking about these technical analysis methods. I have a lot of information elsewhere in the Discord. I have some stuff floating around on my YouTube, on my Twitter, but obviously pause the video if you want, read through the pages yourself, but I'm just going to mostly scan over it and give my take on the information that's been written up here today. So let's get into it. So talking about volume node areas, it's pretty essential that you understand what a volume node area is, and then once you know what a volume area is, you can then look at the volume node POCs and identify them. So volume node areas are the volume bars that are built up on the y-axis. You can see this down the right-hand side. So they're measuring the contracts traded at each specific price point. So the same sort of profile you would see on a volume profile, they're counted exactly the same way. And there's two different types of areas when looking at a volume profile. First is a high volume node area, and then the second is a low volume node area. So the low volume node area clearly are the ones without much liquidity, without much volume, and the high volume node areas are the ones with this large volume profile. So they both individually tell you where the market may have a liquid price movements and where the market may look to bounce, right? The illiquid price movements are usually found in the low volume node areas. So the volume profile that you see down the right hand side is called the visible range. And I can show my settings at the end of the presentation. And I can show you basically how to set it up at the end of the presentation as well. So the visible range volume profile shows you the data that you have on your screen. So this profile right now is showing you the data from the minute the price enters the screen to the current market price. So that's the whole volume profile for that whole trading period. I think this is from like October 2023. So high volume node areas, we discussed what volume node areas are. Now we're going to look at the high volume node areas, right? Again, we're working our way down and to identifying those point of controls, but first we have to identify what a high volume node area is. So these are the more liquid price points in the market. They show you that we previously have an area of interest, that participants were active at these levels, and we had a lot of contracts traded at these price points. So we know that in these high volume node areas that there's a lot of activity here, a lot of contracts have been traded between hands. So usually we'll see price trade around these nodes a lot due to the agreement on price by active participants, leading to ranges forming, support and resistance levels forming, and they can be good places to look for trades and take trades away from them. And we'll discuss this a little bit later in the episode. So taking trades inside high volume node areas or using the high volume node edges as support and resistance are favorable options. This is what I like to use them for. You know, a good description I once saw about high volume node areas is that they have a gravitational pull to them. So a lot of the time you'll see price gravitate towards these high volume node areas, especially if it moves through these illiquid imbalances. So yeah, these illiquid balances we're not going to speak about today. These are low volume node areas, and I think this deserves a whole other episode for that, like a short episode just like this one, discussing these, and we'll do another presentation for them. So back to what I was saying about using these high volume node areas as sort of support and resistances, right? We can see that, you know, the support and resistance areas match up with price and the high volume node area. So this sort of high volume node edge on BTC, you know, is clearly resistance, and equally the high volume node edge here, right, is support. And we can see that, you know, around price action, we have that confluence from the high volume node. Again, this range back from last summer, sort of that range high area matched up with the edge of the high volume node. So we know there's a lot of activity being done here, and then above there, not so much activity. And you can basically see that once price accepted into this low volume node area back in summer, we got that spike higher, right? Because, you know, it was in price discovery and it broke through this area where a lot of activity was done. Again, support here. So you can use these edges of the high volume node as support and resistance. But, you know, today, again, I want to focus on the point of controls more than anything. But at first, we need to understand what the high volume node area is. This is kind of a way of, you know, identifying support and resistance, and it's subject to, you know, where you think the edge will be. Mostly I draw them to the sort of like the bodies of the candles if I can a lot of the time, but some people also draw them to the wicks of candles. So a little example here, right, we can see in the image below how I've extended the lines of the high volume node edges, and you can see how price reacts around these high volume node edges. They hold them as sort of support and resistance areas. Price trades within these areas until they move through a low volume node area into an imbalance market, back into forming a high volume node area, right? So a lot of the time it can trade back into a high volume node area, or sometimes it can trade, you know, into a new one. We can see here, right, price broke down and then it broke down through the low volume node area and traded back into the high volume node area and continued. So always supported by volume, right? Volume is a very important thing in the market. And if you don't use volume on either the y-axis or the x-axis, I suggest you start doing so. So best, you know, high volume nodes are best used when using them with previous high volume node areas. So for example, like I just discussed here, we had that breakdown from price down here. It broke down from the high volume node area and then reclaimed it. So, you know, we know that that's a strong reclaim back inside this profile, and there's a good chance it's probably going to trade towards the point of control, which is here, right? And then even, we'll obviously talk about this in a bit, and then even back towards that high volume node value area high. Then we can see again, once we break above the high volume node edge into low volume node, we go into an imbalanced market. So you'll notice this a lot, that price is constantly supported by volume, and it will move into an imbalanced market when we go into these low volume node areas. So again, looking at another example here of high volume node edges, we can see that the Bitcoin range between 106K and 92,500, right? That shows that there's a support and resistance, and both are being supported by high volume node edges, right? We can see that. We can see the high volume node edge here. This is the high volume node profile. We can see the edge of that profile matches up to resistance, and equally the low, you know, matches up with support. We can see that as we reclaimed, we held the high volume node edge as support, and then we eventually got a move to the POC and then the value area high as well. So this is a good way to identify true support and resistance, as we know there is real volume stepping in, right? That's the most important thing about a market, right? Is that if you're trying to buy into an area where there has not been volume before, then you're probably going to end up taking a loss, right? You want to buy into where volume is. You want to know that there's big participants and active participants also stepping in there, right? Now, talking about point of controls, again, just briefly going to touch on this. So the point of control is identified by the highest volume where buying and selling contracts were traded in price, but on the horizontal axis. So, you know, volume is usually on the vertical axis, but we're looking at volume on the horizontal axis at the moment. The amount of volume for a specific price, right, rather than a specific time. By monitoring the point of control, traders can get a better sense of where the market is likely to go in the future. Your point of control is a constant variable and is changing depending on what time frame, chart, or exchange you are looking at. The POC will be slightly different at each exchange depending on the amount of volume traded at a certain price. So I always recommend looking at putting controls on exchanges that have the highest volume, right? Coinbase, Binance, Bybit, these are your important volume point of controls. It can be found on any time frame, can be found for ranges, or if you want to identify it for an obscure price point. There are many tools for this, right? You can find point of controls for the daily time frame, the weekly time frame, the monthly time frame. You could find high volume node POCs like we're doing here, like over long periods of times. So there's many ways to identify point of controls. Now onto the important thing. We're going to be looking at the POCs now, right? So the high volume node POCs are found at the point where the volume node extends out of the profile the most, right? So indicating the highest amount of contracts traded at that specific price. Depending on what period or time scale you're looking at, the point of control will vary. This is just an example for now. We'll look at what this means in a minute. But if you're using the periodic volume profile tool, right? So it's an indicator on TradingView. Then you're obviously going to get set POCs for weekly, daily, monthly. But for the visible range volume profile, the one we're looking at today, this is going to be helping us find high volume node POCs, and it's very simple to identify. You simply have to locate the high volume node area and pinpoint the most traded volume node for that area given, right? So this is a high volume node area. This is a high volume node area. We can see that this is the highest, the longest point of volume is right here in the middle of this volume node area. It's not always the middle, right? We can see here, this isn't the middle, but a lot of the time when you have a really nice volume profile like this, it tends to be around the middle and the high volume node POC. So this is the most traded point of price for this specific profile. So now we can take a look at what I was just showing on the prior page. That volume profile is just showing is the BTC profile since the low of October 2023. We can locate 3 high volume node point of controls within this price range, and you can basically see that they are in the middle of the range every time, right? So notice how the high volume node POCs have a lot of activity around them, and price action proves that there is the most traded volume over a long period of time at these high volume node POCs, right? We know that. So trading around these point of controls can be very difficult. I usually advise that people try to avoid trading around them. So what I mean by that is if you're trying to take a trade during this chop period, this chop period, this chop period, it'll be really difficult. Equally here, right? You can see how choppy it is around this high volume node POC. The best way to use these high volume node POCs is when price breaks away from them and retest them. So in our current case, which we'll get onto shortly, this is going to be a really nice place to be a buyer on Bitcoin if we retest this high volume node POC, right? Once price moves away from them, then retest. Again, if price moved away here and came back to retest, that would be a really nice place to get long because we know historically there was volume traded there. So moving on to take a look at this high volume node POC that I just discussed, right? This one at 96,500. So we can see that it's quite hard to take a directional trade, when price is trading near a volume POC, right? We can see what happens here, like absolute chop fest, right? But now we have moved considerably far away from it. A retest back towards this region, we could expect, and we should expect it to give a bounce. Since we have confidence that there is buying and selling activity there, historically we know that from the POC, there'll be a good reaction. So we can assume there will be in the future, right? We can even see here as price traded back in towards this POC that we got a little rejection from it, right? So we can assume that price is going to do the same from this side. So now we know what a high volume node POC is. We want to identify how to implement these high volume node POCs into your order block, right? And implement them into a potential order block strategy you already used, right? So order blocks are areas that mark as supply and demand, and both can be used for reversals in either direction. We'll do a further educational write-up on order blocks in the future. As mentioned previously, they can be used with order blocks, and overall a great tool to have in your pocket when you are looking for areas of true liquidity, as we know participants were interested in them here before. Identifying POCs within an order block can give you that little bit extra confirmation and reassurance when placing limit orders, knowing you have support there previously from larger players. So let's go back and look at the 96,500 area. We know there is a lot of volume there. So the question is now, do we have support from a demand area as well? Taking a look at this first example here, like I said, this 96,500 point of control, we can see as price traded in towards this point of control, there's some consolidation. Clearly there was some sellers in the market below the high volume POC, right? We can see people tried selling into it and we got a little bit of a reaction that tells us that there's still interest into this region, right? We can see on the 3-day that we do in fact have this is the daily, this is the 3-day, we do in fact have a high volume node POC with a demand resting below it, right? So this area is a really critical place for Bitcoin to hold. If we were to retest it, it should at least give a little bounce, that 96,500, even down to 95k, right? Because we know we have an order block supported by a very high volume node area. So knowing that there's large participants active here, this can be beneficial to us in taking a trade. So just these little things adding to your order blocks can be very beneficial to you. Just knowing that your order block that you're looking at has support from actual volume. It's really important that you know that the order block is valid based on there being volume there. So example 2, we're going to be looking back at the last cycle, quite a way back into 2022. And we can see that, you know, at 47,188, we have a high volume node POC, right? And before this breakdown, this was the highest traded point of control for Bitcoin before the breakdown, before we went into this sort of like summer range, or I think it was summer range. So Bitcoin broke down, leaving a supply area, right, which was supported by a high volume node POC. At the time of breaking down, this was the most traded price for Bitcoin ever. So basically we can look at taking a short back into this supply area towards the high volume node POC, because we know that a large amount of volume will be here. And likely this is a good place for a reversal since the trend remains down. We can see price eventually bounces back up, trades into the high volume node high volume node POC with a weekly supply, and you can see what happens. You can see the reaction from that weekly point of control, right? The trend remains down. We were in a bear market. We were making lower lows, lower highs. So we can look at taking a short invalidation above the high and targeting new lows, right? Standard order block, trading, but we just have support from that really high volume node point of control within the order block to give us that extra confirmation. So that's pretty much it, keeping it short and sweet, point you in the right direction of using point of controls, right? You can use these methods trading all point of controls monthly, weekly, daily. Just high volume node POCs tend to have the largest reaction because they have such a significant effect on price, given they are traded over such high time frames. Some small additions to your trading, right, and noticing what to look out for can be very, very beneficial to you, especially if you trade order blocks. These high volume node POCs are powerful and should not be faded. They're a good thing to just have on your chart, right? Just put it on your chart and notice where they are. Of course, if this is something that's you are interested in, then please leave a like, right? Subscribe to the channel and check out the socials and the Discord below. I do a lot of educational write-ups and content of this form in the group, and going to be doing a lot more over the next couple months as we move into summer and conditions likely get a little bit slower. Going to quickly flash up my settings now for the visible range volume profile, and hopefully I see you guys next week for my Tuesday market review. Bye bye.